Today we're talking next level. We are talking. We like to underwrite massive deals. What does it mean, Joy? Yeah, over here. Okay, sorry. We like to underwrite today a massive deal, and to show you where we can make money or lose money, for that matter. Okay, if we don't do it right, we can also lose money. Now with me. So we have a property for sale, 758 units. It's a portfolio of a bunch of properties. Okay. The bad news is it's spread all over. So you have 156 units in Daytona, 97 units in Tattsville, another 138 units in Orlando, another 138 units in Port Orange, another 82 units, Tampa, so far 152 in Lakeland and 965 in Melbourne. Well, I don't like the idea. Number one, we have one big minus here because too many location. Too many. I got driving, and that means you have more intense management. Is that a bad thing? Nah, it's not a bad thing. It's all about the price. We're not scared, okay? It's all about the price. The good news about this deal, the owner, he currently has it for 20 plus years, okay? What does that mean for you? When somebody owns a property for so long, his basis is that much low, which means you can get a good deal. You hope so, right? Because his taxes are low, his insurance is low. You bought it 20 years plus ago. It's not a flip. More often than that, you see flips. You see people have they try to flip. I bought it 2 years ago. I want to flip it. I bought it a year ago. I want to flip it. We like the idea that when someone owns property for over 10 year plus, you know there's going to be meat in the bone. You know there's going to be upside, because what happens is when you own a property for so long, for 10 years, 15 years, 20 years for that matter, you don't have to push rent so much because your basis is that much low. Your mortgage payment is that much low. Everything is lower, right? So if your basis is low, you don't have to push rent. You're making money. You bought it 20 years ago.
So we just reiterate to the audience, because more people are joining right now. Just reiterate what
today we're going to underwrite a massive deal, 758 units for those who just joined us. Located in 8 different locations in Central Florida. So I was saying the bad news is too many. Sorry.
Seven different communities. Seven different markets. Two in Daytona.
Right.
Yeah,
the bad news is too many moving parts. Too many locations. That means more management intense. The good news, the property is owned by one group for 20 plus years. That makes it very attractive because their basis is very low, which means you can get a good price on it. What does it mean? And also it means there is an upside on the rent. I forgot Joey, my jack is there? Yeah. There is upside, okay, on the rent, because the rent right now is that much low, yes? So today we're going to underwrite this massive property, and I'm going to tell you what number it makes sense. Excuse me. Thank you.
Yeah.
Right. Okay. Now. Okay. So we have over here 758 units. Okay. We are going. Okay. For us, the number one thing, really important, okay, before we evaluate property, what is the income? What is the income?
Just touch it way on the screen. So
income and expense. Joey, what's the income?
So
we're going to start with the income?
Yep.
Yeah. I believe it's 9 million?
I think 10.5 million for the income.
Okay, 10.5 million income. 10.5 million. What is the expenses?
4.2 million.
4.2 million. And the NOI?
The NOI, 5.250.
10.5 minus 4.2?
Yeah, 10.5.
4.2.
6.3, sorry.
Yep.
6.3.
What's the expense ratio?
40%.
40%. Okay. Number one thing over here, big mistake that people do, or potential buyers do, that 40% is wrong. You need, especially, listen, guys, This property has got too many locations, too many moving parts. There is no way you can run this property under 50%, 5-0. If you do it under 50%, better for you. That's a bonus, okay? But I don't want to rely on luck or a bonus. I want to be realistic, and therefore I'm going to underwrite this on 50%, okay? So that's a joy. Okay, so my number, right? What is my numbers? The income we said?
10.5 million.
10.5?
And that's based on the T3 income.
10.5 the income. And my expense right now is 50%, okay? Which is, what is the NOI?
5,250.
5,250. 50 million. Okay, this is my new NOI, okay? My new NOI, according to my numbers, 5,250,000. Keep in mind, we're going back to the seller. Seller is 6.3 million. My NOI is $1 million less because I'm going to take 50% expenses. Can I run it? Can I do it for less? Yes, I can. But what's important is, okay, overall, general terms, 50% is a good number, especially right now. Ladies and gentlemen, insurance went up, okay, across the board. Tax is going to go up too, okay, because it's going to reset the new price. I'm not taking a chance. 50% is my number. Okay, Mr. Joy?
Yeah.
So we got the 50% NOI, okay? What they're asking for it? 90 euro, right?
90 million.
90 million?
Which is
90
the
million.
one-
right, so
what is that, 118
So
a
they're
door,
asking 90 million. 90 million. And what is the per door? 118 per door, right?
118.
8. Okay, per door. Now, what is the average rent? Average rent right now, if you take if you divide 10
10.5 million.
Yeah.
10.5 million divided by 758 units divided by 12 is 1154. 1155.
So average rent is 11.55 per month, okay? Average rent, okay? And I'm paying 118 a door. The 1% rule, it's not bad. It's applying, okay? It should be 115K door. That's 1% rule. However, not so fast, okay? Not so fast. Why? This property is not what I call a regular property. It's a wood frame. What is wood frame? Wood.
That's the vertical.
F-R-A. Wood frame, single story. Single story. So back in the 80s, there was a developer that put together some few 100,000 units, wood frame only, it's single story. Yeah, it's wood, there's no concrete. That makes it much less attractive for lenders and insurance company because one hurricane, boom, fly. Not a Cat 1, it gotta be a major hurricane, okay? Does that mean we're not gonna do it? No, we're gonna do it. We don't care. We do it because we are all about numbers. The deal makes sense, we're doing it, okay? So, here's the thing. So asking 115 a door? 118 a door?
They're asking 118, it was 90
118.
million. They're asking 90 million.
90 million, okay. I'm told I can get it for 115 a door, right?
Right.
Per door. What's the average rent?
Which meets your 1% rule, the 115.
1% rule,
Yeah.
that's good. What's the average rent?
1155.
11.55. Do you know what's the average mix? 2, 3s? Don't bother, I know already. Those are all studios and one bedroom, mostly studios.
Mainly studios at once?
Mainly 90% studios, okay? Maybe some one, because it's a one frame, it's single story, okay, with patio. So it's 11.50, right. So I'm looking at rent to between 1,200 to 1,250 average, that's it. That's my upside.
So you can raise it about 100 bucks.
That's it. That's it. What does it mean? My upside is that much low. Not too much upside. Is that a bad deal? No, it's not a bad deal. It's a great deal for the right price. Okay? That means we're gonna go the other way, Joey. We're gonna start from the end, okay? Let's say right now my average rent is 1,250. 1,250, okay? I tell you what, 1,300, okay? I'll even go aggressive, okay?
150 bucks over the net.
Take $1,300 times 758.
13 or 1350?
1,300.
Yeah.
Go.
758.
1,300. We're gonna see
Times 12.
how much the property worth right
It's
now.
11.8 million.
In order for me, ladies and gentlemen, in order for me to establish my buying point, I want to see what is my exit strategy, because it's all about exit. This is not, I'm not buying the property, okay, because of I fell in love with the color. You only fall in love with your family. So when I buy a property, I need to make sure there is a good story to get out. There's a good story for execution. There's a good business plan where I can execute, get out, and achieve a threshold for my return. Okay, so now we're going to calculate how much the property worth in the exit strategy. Okay, I would say within 16 to 24 months. $1,300 times how many units?
758
758.
times 12, which is 11,
Times
little over
12.
11.8 million.
How much? 11.
11.8, yeah.
Excuse me?
11.8 million.
Times the 5%.
Operate, yeah, for your vacancy. So
5%
that's going to
vacancy.
be
5%.
11.2.
Vacant.
11.2 mil.
Rule of thumb, 5% vacancy, it's the way to go. Just to be on the safe side. What is the new income now?
11.2 million.
11.2. 11.2. Thank you very much. 11.2 times 50% expenses. Now,
5.6
can I?
million. Yeah.
I'm sorry.
5.6.
5.6
NOI.
NOI. We are going to be able to underwrite this, to operate this property much below 50. I would say around 40 to 45. Okay, but I'm very conservative. Okay, and I want to make sure the next potential buyer is comfortable to make an offer and to buy the property. So if I put 40% expenses, they're going to do their own underwriting and they're going to put 50%. So might as well put 50%. Okay. 5.6 NOI. What's the good cap rate to sell this at? 6?
Probably around a 6 today in this market.
All right. 5.6 divided by, right? 5.6 by 6 cap. How much is that?
It's at 93.5 million.
93.5. Sales price. Sales price. Ladies and gentlemen, 93.5, that's my selling price. How much is asking?
90.
Am I making money?
Not much.
You're not making.
Can't make them really much
Because,
here. Yeah.
because you don't, the $90 million does not count for
CapEx.
and does not count for closing costs, okay?
Correct.
Therefore, okay, to make money here, you need to be around a $75 to $77 million price mark. That's it. 75, Joey, 77 million, okay? Max, okay? Divided by how many units?
758.
How much is that per door?
101,000.
101K per door?
101K.
I would say go to 105. How much is that 105 per door? Times 758?
105 times 758. 79.5. Just under 80.
80 million. And how much? That's 105? Okay.
That's 105.
80 million all day long, not a penny more. And by the way, guys, 80 million is a very aggressive number for this property, because you have about a 10 to 12 million dollars, maybe $10 million upside. That's it. It's a conservative number, because we're not going to be. I'm not looking for luck. Okay. Can I push rent more? Yes, of course I can push rent more. But what if I can't? Let's say the economy tumble. Right? So we always have to be conservative, and therefore $80 million for this deal, that's the right price for it. That comes out to how much per door?
How much?
105 a door.
105 a door?
That's what it comes out to?
79.5. Yeah.
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 105 a door. What's the average rent? 1150. It's very good.
1150.
Yeah. $80 million, you don't lose. You can't lose $80 million unless you're a terrible manager, right? Can you kill it? Can you make a killing in this property? No, it's not going to be any times. 80 is not going to 100 anytime soon. 100 million? No. But it's going to 90, 92, 95. Okay, it's a good number, and potentially it can go to 100 over the years to come. But to pay more than 80, you basically really pushing to the limit, unless the market is that strong, okay, and everything going up. It's not. Right now, market is steady, and it's not necessarily going up. It's not going down, but it's very strong. Okay, not going down. Okay, Joey, this was one property. When are we taking a question and answer from the people?
We're going to take that at 12:30, so another 15 minutes. We'll take live questions with video.
Right.
Right, so anybody wants to come in, video with a question, at 12:30 we're going to open up the
12:30
questions.
we can
But yeah,
take
I have a
question
question.
and answer. Yes.
You know, you always talk about going big or going home, right?
Right.
That's your mantra, right? You're trying to go big or go home. And at the end of the day, you always say that small deals don't make sense.
So let me explain why small deals don't make sense. Okay, more often than that, there was a website, loopnet.com. You can check it out. Kresky.com too, for that matter. Okay, and you see a situation. Okay, let me just get rid of this. So 20. Let's say 20 unit, Joey, okay? 20 unit asking, here's why small property don't make sense. 20 units, okay? Asking $200,000 a door. What's the average rent? Per door. Okay, average rent is $1,500 per door, okay? Average rent. Average rent, okay? Now, here's the problem. So 20 unit times 200 is $4 million, okay? Asking $4 million. Guys, this is a very typical deal, very typical, okay? In the market right now, average unit anywhere between 170, 180 to 200, 210 per door. And you ask yourself a question, gee, why not? I'm getting the rent. So the number one rule, price per door should equal to 1% of the purchase price. So for example, if I'm paying $200,000 a door, how much my rent should be?
About $2,000.
$2,000. No problem. The sellers are very cute these days, very cute. They say, don't worry about it. You're gonna get there. And I'm sure I will get $2,000 a door. But that's my exit price. Why am I paying $200,000 a door for something that's not there yet? I'm working for free for the next 2 years. So therefore, this property, if it's $1,500 average rent, should go for $3 million. $1 million less than asking price. And those are tough to get. Because sellers always look, in the smaller deal, the market is much more there, meaning there are many more people that can afford a 10 unit, 20 unit, 25 unit, 15 unit. So the seller, they have the luxury to ask a lot of money. May not get it, but sometimes they do get it. And you got to be very, very careful, because if you pay for this 20 unit $4 million, you're not making money. You're actually losing money. You're losing money because your rent is not there. And the $4 million is my exit price. Again, I'm always looking, what's my exit price in case of a crisis, in case of the economy tank, in case I need my cash, I need to get out. I can't wait 5 years. Okay.
All right. Then maybe compare that to another, like you said, the deal we were doing before, the 758. Like, the scale of it's so much bigger. And then people are going to ask, how do I get involved in that?
So to get involved, right? So obviously, I mean, I'm getting questioned because people want to get involved with big properties. You want to partner up for a big property, as opposed to buy a small property, unless you buy it on a deep discount. And I urge you you can message me about the property, and I will tell you if it makes sense or not. I have no dog in this fight, okay? I want you guys to make money, not to lose. But to get to the next level, you will have to partner up with someone, okay, that smart, not necessarily smarter than you, but someone that's more experienced than you and has got the mean, and can take you to a big property, is buying 200, 300, 400, you can partner up with that person. But the negative in that, obviously, you're going to be a passive investor. If you want to be boots on the ground, you may want to go with a 10 or 20 unit, but do not rush. If the numbers don't work, wait. Money stay in your pocket. Don't just buy. I'm getting phone call. People want. I'm itchy to buy. I want to buy. I need to buy something, and I don't want you guys to make a mistake. Show me the deal. There's free information. I will don't charge you, and I will let you know what is the price to buy that. We go live 12:30 to 1 o'clock. Live. Any question you have about real estate?
Yeah, we got about another 10 minutes until we go live.
Anybody
until we open up questions with the live.
Right.
Yeah. So I mean, again, the Central Florida portfolio deal. You think it's overpriced?
So yeah.
Based on what you just.
Based on what I see, and by the way, that property is still in the market. It's not sold yet. Okay. It's not. Look. When you guys I rather you overpay for a bigger property, bigger community, than a smaller community. Because if you overpay for a big community, like the 758 unit, let's say you pay 90 per door, if you get a good mortgage, now here's another thing, okay? I'm going to throw this out, okay? So the asking price is 90 per door, right? Okay.
90 million.
$90 million, excuse me, $90 million, okay? Let's say there's no room. Ask the seller to hold a second, okay? If your offer is 80 million, offer, okay? In order for the seller to take you seriously, you want to put some non-refundable money. I would say about $1 million, $1 to $2 million. Non-refundable.
So typically, what percentage of the offer would you say?
What is that?
Typically, what percentage of the offer would you offer a non-refundable deposit?
That's about 2%. Yeah. Mm-hmm. And the reason why that's
no, 2 million. Well, 1 million. Right, 1 million on $90 million.
Yeah.
Or 80 million. Sorry, 1 million on 80 million.
You know what? I will just go $1 million. Okay.
That's 1.25%. Yeah.
Are you sorry?
Yeah, you guys circle it around. Yeah.
Yeah. I will put $1 million non-refundable. How much is that?
That's 1.25%.
It's more.
Of 80 million.
It's more. It's 8%.
1 million over 80?
So you're right, 1.5, right?
1.25%.
Right. Yeah. If you want to earn this deal, one way to do it, you put non-refundable deposit. That makes the seller crazy. Wow, I have non-refundable deposit. I know it's going, by the way, it's not 10,000, okay? And you know it's going to go through now because it's a lot of money, okay? That's one way to entice a seller to give you the property at your price. Another way to entice a seller, let's say, no, I can't go down. My offer is 90 million. This is my offer. Okay, 90 million. I can't take this. I don't want this. What do you do? So number one, you never give if you buy a market price, you never give non-refundable. Never. What's the upside? You're paying market deal, okay? Why will I put non-refundable?
You're saying why take that risk?
Don't take a risk. Never give non-refundable. And I'll go even further. I want you to ask the seller, okay, potentially to hold between 5%, 5 to 10% second. So, for example, at $90 million, I give you $90 million. By the way, I will pay for it $90 million. If the seller give me a second of $9 million at 4%. Because what I do now, I'm leveraging my down payment, okay? Therefore, I'm coming to the table with that much less. Now I have another $9 million left to buy another big property. But in this case, seller is not willing to hold a second. Seller is not willing to go down. He's going to have to wait until he gets his offers. The good news for the seller, he might get close to 90 because there's not too many communities, big community of that magnitude, okay, for sale in Florida. Everything you see for sale in Florida, maybe it's a 10 unit, 5 unit, 15 unit, 25 unit, 30 unit. Rarely do you see 200 plus units for sale in the state of Florida, maybe a handful, not even. Because there's such a high demand for multifamily. We're going, okay, any question?
We're about 5 minutes.
5 minutes for a question. If you have anybody, we can go now.
You ready now?
Yeah, we're ready to go now.
Maybe someone's coming in right now. Yeah, we got someone right here. I'll accept their request to join. Guys, live questions. You can come in, ask your questions live through the video.
Live questions only because they get too many texts and it's very hard to keep up. Yeah.
Yeah, I think we have Eitan trying to come in. Eitan, if you're there, accept. There we go.
Hey, how are you?
Hi, Jan. How are you doing?
I'm good, and you?
Really good. I'm in real estate as well. I was wondering if you could do like another valuation. And another question I have is, a lot of these properties are like 90, $50 million. How did you like leverage yourself when you first started out to get these properties?
Right. So when I first, good question. Thank you. When I first started out, okay, I didn't look at 90 million. I did not look at 80 million. I looked at smaller, $1 million, $2 million, and I built that from that. Make sense?
Mm-hmm.
So let's say you buy one for $1 million. You double your money. Let's say to $1.5 million, not double, maybe $2 million. You have down payment now. You're all done. You save your money, and you sort of like you build it out 2 to 4, 4 to 8. It's not overnight. But you have to have the vision.
Gotcha.
You have to have the goal in mind. This is what I'm doing. That's what I want. That's my long term. I'm not talking long term 20, 30 years. No, I'm talking long term 5 years. But you got to start somewhere. You got to start somewhere.
Abante אותך. And a lot of these partners where you say like experience, where did you meet these people that gave you like insight when you first started out?
So when I first started out, I was a realtor in South Florida. We're going back almost 30 years ago, 1998, 1997. So back then, you don't know, by the way, there's no internet, no social media, no YouTube, no Instagram, nothing. Everything is just a matter of advertising in the paper, local paper, or New York Times for that matter. I remember we advertised New York Times about property for sale in South Florida, and then you meet people, and then, but that time you only sell them, you get commission, right? Mm-hmm. I'm not about yet because I'm still working on my knowledge, and I'm learning about real estate, and at this point I'm just selling real estate. So the question, how did I meet my other investors?
Yeah.
So it's a true story. I met my first partner, believe it or not. Very nice guy. He came to the office. He saw my name on the wall. Top agent 1997, top agent 1998. Give me the word I want to show. You have my top agent thing? No, it's not here. No, it's not here. Selling agent, okay, 2000. So he told the assistant, the receptionist, the office, true story. I want him on the wall, right? Because you only deal with winners. He come in to buy property. He's not trying for a new agent to start. You understand? It's important, in other words, he wanted somebody with experience. What year is this? 2000. Still have it. Can you see this one? That one too?
2000.
Amazing, right? Can you believe I still kept it? Okay? You can say 2000 here, okay? I put it back. Thank you. So the guy said, I want him. He waited for me like 4 hours, okay? I went out, I said, listen, I got $3 million. Okay, I made money in the stock market. He even showed me the tax return. He had cash, okay? He moved from New York to Tampa and then to South Florida. I went to my office. I went to the computer. Okay, I have this. No. Show him what you have in your pocket, off market. So I show him the off market deals, right? And he bought a few property. A year or so down the road, he said, you know what? Let's do it together. We start buying property. I give back my license, and you can do both. But I waited about 3 years because I was working the system. Yes.
And my last question is, like you were talking about finding like deals, like the previous example, you said like this deal we'd have to be at $3 million for it to make sense because we were paying a premium with the under market rents. Where do you source these deals from? Where do you find these deals that you
So we have a whole team. We have a team in our office that do call all day. Calling owners, calling management officers. Plus we have brokers coming to us all the time with deals. And it's just word of mouth. You have a name, people come to you. Unfortunately, a lot of those deals are overpriced, so we can't execute. We have to, you have to buy it right because otherwise, I'm not looking for luck, and I'm not looking to, hopefully the market going up. I'm not interested in that. I'm interested in what probability, okay? Where the market now? And what happened, I'm always looking at the worst case scenario. You know?
Gotcha. Yeah, those are my main questions. I really appreciate it.
Thank you for the support.
I
and
love the videos.
Thank you. Keep pressing likes. Okay. Thank you. תודה.
בסדר, תודה רבה.
תודה. Bye bye. What do we have?
Okay, there's someone else coming in.
Daniel, you have my drink?
Something?
I have my drink on the desk, yeah.
So we'll take another
Yeah.
question here. We got a bunch of them coming in. So.
How you doing? So,
We got a gentleman here. Hello.
yeah, we see you.
We see you, but I don't know if he sees us. He wanted to join. All right. If he's not going to come in, I think we're just taking
Oh, just
him
this, thank you. Thank you.
off. Hello.
How you doing?
I think his name is Jeff. I don't know. He's not answering.
Oh yeah, I'm here. I'm here.
How are you, so Jeff? How you doing?
I didn't know you were talking to
You're
me.
live on the show, Jeff. How are you?
Oh, doing wonderfully, but I'm driving, so I'm a little nervous here.
Don't worry about it. It's okay. It's all good.
How are you guys
Let me be
doing?
nervous, okay? Good. Where are you calling from?
Boca Raton,
Oh.
all the way north of you.
We love Boca.
It's a good spot.
Yes.
So what's your question, Jeff?
No, I was just listening in. I see Eyal's posts, and I saw he was doing a live, so I was interested just to kind of listen in and learn.
Well, thank you for your support and keep listening and very much appreciative. And press like. Keep pressing like.
Best of luck. Yeah.
Thank you. Bye.
Okay, we'll take another call. We get some love from people. You know, take
Put the AC on.
Jay Roos. Oh, he left.
People, if you have any question, anything about real estate, any question is a good question. There's no such thing as a stupid question. We're here for you guys. Hey, what's up?
Hey, Eyal, how you doing?
I'm good, and you?
I'm good. Just at the gym, listening to real estate. By the way, I just wanted to say thank you for everything you're doing, especially the underwriting part. It really helped me kind of evaluate properties really quickly.
Oh, wow.
So I just want to say thank you for that.
That's my job.
And then my question is going to be, ever since you pretty much taught us how to do the underwriting, I've been sending tons of emails, and I've been getting deals that match that criteria of the 1%. The only issue I'm having, because I live in Jersey, is that there is no upside in the rents. You can only raise the rents. If it's 4 units and above, you can only raise the rents like 3 or 5% a year.
Where in Jersey?
So what do you suggest? North Jersey.
Where?
I live in Fort Lee, but the properties I'm looking at are in North Bergen, West New
I used to
York.
live next door to you, Cliffside Park, the Carroll Towers. Yeah, no, we like
What?
Fort Lee. I used to live next door to you. Yeah. So,
Yeah.
can you hear me?
Yes.
Yeah. Yeah, it's a problem. It's a problem. First of all, what are you looking at? 4 unit?
The one I was looking at right now is an 18 unit, 2.7 million. Average rents was about 1650.
1 second, so let me do that. Okay, 2.7 million?
They were asking 3. I lowered them to 2.7.
Sure.
They're willing to go under contract.
How many
2.7.
units?
18 units.
Okay, how much per door?
Per door, it's about 1650 right now.
No, how much you paying per door? 165? No, the rent?
Yes, about 165, 170K a door. It comes down to
170K door, okay. And what's the average rent?
1650.
Yeah, that's the 1% rule, that's good. Okay. Okay, how much can it go up?
But the problem is, that's the 3 to 5% a year. That's the issue.
Good. Not good. Don't like it. The problem is you're not making money. Are you breaking even? What's your return? If you tell me I'm getting good interest rate, 3%, 4% interest only, 5 years, or I'm getting second from the, you know what I mean? What is the play here?
That's what I don't see. My business, the partner I want to do it with is saying, maybe the market's going to go up, but I don't want to go based on maybe.
Don't go maybe. I don't care for that. I don't like the maybe. Okay.
So yeah, what would you do if, let's say, you have about $1 million, $2 million cash?
I have a partner with somebody. Yeah. I'm sorry.
What would you do if you had about $1 million or $2 million in cash to play with? I already own a property as well that I have over $1 million in equity, but it just doesn't make sense to pull out cash because I got in at like 4%.
So if you want to message me privately, okay? But please, okay. But I would partner up with somebody that's doing at least 200 units. I need a good story for you. Don't do it. There's no good story. Hold on to the money, okay? I don't have a good story. What's my story? Listen, if you pay $2 million, that's a story. 2.2, it's a good story. At 2.7 with closing costs, okay, yes. Can you service the debt? I don't even know what's your down payment. I don't see the upside here. What year is that?
It's all the buildings in New Jersey are very old. It's like 1910.
No, that's okay.
Like
right. Yeah. I don't like it.
And they were asking, originally they were asking 3.2, then they went down to 3, and I took them down to 2.7. But I don't see the upside. I don't see the upside. It matches the 1% rule, but there's no upside.
You know the answer. Now, the upside will be in South Florida, you can go up. So this 1650 can become 2000, for example, okay?
Then it would be a good deal, correct?
Yes.
If there was like,
better deal. It's a much better deal, correct, yes.
Now, hypothetically, let's say you're able to bring this to 2000 and you buy it for 2.7. How much money upside is there in a deal like this?
So it's simple. 200 times 18, how much? Joey?
What?
200 times 18?
100,000?
Yeah. Potentially, yes.
3.6.
How much?
3.6.
3.6 million, yeah? 3.6 the upside, but you have closing costs and whatnot, okay? But at least that's a better story.
Okay.
I don't like it.
And then Eyal, I have a question. On the bigger properties, 200-300 units, does the mortgage adjust the rate every like 5-7 years?
No, because we don't care. On the big property, we're going to be out. We buy for like 2 years and get out to make some good money, or refi, get a new mortgage. But if you want to message me in private, we can talk more.
Okay. Thank you so much, Eyal.
Thank
you. Appreciate it.
All right, on to the next question.
Yeah, people come in?
We got a lot of people coming in.
What time is it?
He was wanting to come in. J. Roos 19.
So,
Let's see if he can come on.
we might have to do twice a week. How you doing?
Hey, how's it going?
I'm good, and you?
I just had a few questions. So I work traditionally more so in the single-tenant net lease space for retail and also shopping centers. And we're going through a little bit of a questionary period with the tariffs on the horizon on how my buyers are purchasing real estate for value add and new construction. So I just wanted to see if you had any input.
Are you the broker?
On kind of what your outlook is
for the tariff?
In regards to, go ahead.
I'm sorry, in regards to the tariff?
Yeah, as regards to the tariffs that Trump is imposing with with China and Canada, because it's where the majority of my larger clients are getting their product, the new construction product from.
Right,
so I just want to get an understanding of how you view that.
You're just gonna have to write. You're gonna have to write.
Accounting for that right now.
You're gonna have to ride the storm. It might get worse before it gets better.
Fair. I guess my next question leading into that is, what do you consider in today's market as a good deal? With high interest rates, I know a lot of my acquisition heads and the REITs that I work with are focused on penciling deals just due to high interest rates. If you can pencil a deal in today's environment, you hedge yourself to protection from interest rate fluctuation.
Right. So you're right. Mm-hmm. Yeah, so you finished? Continue, I'm sorry.
So I just kind of wanted to get your read
Right.
on what you're seeing in the market. Are there good deals out there today, or do you think it's a bit supply constrained?
So-
Sorry, the camera's so close to my face.
No, it's okay. So are you referring to retail or anything in general?
I noticed most of your product is in multifamily, but I would be more so curious in retail for myself. But if you want to go over both, that would be great. I'd be extremely interested in what you have
Right.
to share.
So listen, my answer is very simple, okay? Whether it's I prefer multifamily, okay? If you're in retail, I want to see potentially liquidate everything and get into multifamily down the road. But in terms of a good time to buy, there's no such thing, good time to buy, bad time to buy. You don't buy because market going up, yes? Or you don't buy because market is going down. You want to look for a deal. And the interest rate is going to be calculated into that deal. Meaning, I'm buying a particular deal, a multifamily of 50 unit, 100 unit, right? In a deep discount, I don't care about the rates anymore. Because it's already calculated into the deal. Make sense? So what happened is instead of let's say you make an offer, let's say looking at 5 deal or 10 deal, when in a good market where the rates are better, you can potentially win every other deal, or the deal will make sense. Maybe now instead of maybe instead of 5 out of 10 makes sense, maybe 1 out of 20 makes sense. But it's okay, it's still gonna make sense. You have to look deeper, that's all.
Understood. I guess for you, so it's funny you say that you want to see me one day in multifamily. I actually started with a group up here. I'm in Manhattan myself. I'm a broker. So I started up here with a group that's more single tenant net lease focused, and a majority of our clients were leaving Manhattan's, management intensive, rent controlled environment.
Well, that's why multifamily is the way to go.
Yeah, moving
next level. Right.
Yeah, moving so moving more so towards our product. But ultimately, multifamily has interested me. It's just I was offered a couple syndication positions in this past year. This is now my 6th year in brokerage. It's very, very successful so far, but right now I'm getting offered in syndication positions to, obviously flip my fee into the next deal that people are interested in with the buyer as a partner. So I've really been, kind of taking that in consideration when looking at each deal, underwriting in terms of a sale. But, ultimately I want to figure out how to get on the other side of the phone. I think that's the goal for every broker in today's environment, or at least should be. Just kind of given how our
because we are too comfortable in our position, too comfortable, what we're doing now, and you want to cross that, You want to cross to the next level. That's my job. That's what we're trying to do here.
Exactly. From what I can tell is that multifamily is a little bit lower barrier to entry, price point wise. So that's probably where I'll end up starting.
Right.
I've been looking at more so 1 to 3 unit dwellings.
No, it's too small. If you can
taking on of ownership, do you think that's a waste of time?
Waste of time. If you want to message me privately, I'd rather see you going a little bigger. Wait until you have more money.
Okay.
All right.
All right. Very well. I'll message you. Thank you so much.
Bye bye. Thanks.
Okay, we got some more people coming in.
What time is it?
12:45.
What time?
We got a lot of people here. Trying to go in order from everybody who's coming in.
We need to do it twice a week.
Yeah, we might
Daniel, twice a week. And start earlier.
Yeah, I'm gonna try to get David in here. Yeah, I guess a lot of people calling in. Obviously, people are looking at small deals. Obviously, your mantra is next level.
Right.
And, you want people to go into bigger.
Guys, small deal is okay. It's not taking to a next level. I want you guys to go to a next level. And I'd rather you save some money before you execute on small deals, unless the deal is super, super good. What do we have now? Just keep pushing. Here it comes in. How you doing?
Hey, Eyal, מה המצב?
מה נשמע?
בסדר. So I've been texting you if you remember about that kind of option of investing in real estate.
Which one?
You remember that I told you that there is some guys that that he offers to partner and he buying properties in Houston,
Yes.
Texas, and,
Yes.
So I didn't get your opinion about this. What do you think?
So are you passive? So you just gonna, how much money are you looking at?
He said we can start from 20 to 80k.
So you need to make sure this, look, the deal is good. More important than a deal, when you go to a sponsor, ask the sponsor what kind of track record that person has. We don't want this guy the track record of the sponsor. What is this track record, or his or her? Okay, you check them out. Are they legit? Are they legit? The people?
I think so. Yeah. What is a track record? How I get it?
Well, you want to ask, number one, ask for a resume. Okay.
Mm-hmm.
Ask for other people that invested with him. You want to talk to them, see how the process went. And the more you ask, the better you're going to be educated.
Oh, so this is like what you mean track record, like to get some info about
Yeah,
that.
by the way, yeah, before I care about the property not as much right now. I care about you're gonna earn somebody $80,000. I want to make sure the guy is legit. He's not a thief. Forgive me.
Yeah. I got you. All right. Yeah, I will do it.
Let me know. Keep in touch. Thank you.
Thank you.
Guys, we have a few more minutes. We take questions. Next level. Next level is what we call next level multifamily. Yes, Joey.
Right. I mean, because your whole life, like you said in the beginning, your whole life, you always went to the next level.
Yeah, because
you lived by that.
I live by that motto. Otherwise, we all stay small. We always have a goal in mind. Okay, where to go? Where we see ourselves in coming years, coming months, for that matter.
I'm trying to get one other guy here. There we go.
How you doing? Moshe. Yes. Hi. How are you?
Bad connection is loading.
Bad connection. Yeah. So while we're talking next level, bad connection. You want to?
Yeah. It's this connection, not ours. Benny. That connection. Deal with it.
If you have any question, it's free real estate advice. No string attached. What they call it.
Should I get him again? Let me try again. Try him one more time. There you go.
How are you?
Oh,
It's gone.
he left. Okay. Let's move on to the next. Try to get David here. I guess maybe in the meantime,
I want to put on.
In the meantime, I just want to have an example maybe on the board.
We want to talk about 1%, the 1% rent rule. Okay, it's really, really important. Okay, when you buy property, let's say they're asking 3 million, 4 million. Okay, for example, okay, $3 million. Let's say it's 25 unit. Joey, what's 25 unit? 3 million divided by 25 is how much?
$120,000.
And 4 million? 120K per door.
160.
This one, 160 door?
Yeah.
Okay. Okay. So here we have a situation. We have a $3 million for 25 unit, or we have $4 million for 120 door for 25 unit. Okay. What's the average range, Joey? Average range for 25 unit is $900. So if it's $900 like average rent,
That's below the 1%.
I want to pay 90 per door. This one I want to pay 90 per door. How much is that, Joey? 90 times 25?
2.250.
2.250. That $3 million, no longer $3 million, but 2.250 because the 1% rule, 1% of the purchase price is 1% the rent. So a lot of time you have a situation where, it's not $900 a month. It's $1,200 a month pro forma. Meaning you're gonna get there eventually, but why am I working for free? So you want me to pay, the 1% rule does not work because you want me to pay extra per door because I'm gonna get there eventually. I don't work for free. So it's really important, if you learn one thing today, the 1% rule is extremely important, okay? When it comes to buying property, and make sure that price per door is 1% of the rent. You have anybody else?
I'm trying to get it 1 or 2 people, but for some reason they're not able to join.
How much time do we have?
I'm not sure. We got about 10 minutes.
We got 10 more minutes, guys. Ladies and gentlemen, free advice, anything about real estate, any question you have. We promote Next Level, we promote Multifamily because we believe that's where the money is. We want to make money. I want you guys to make money, okay? So Multifamily is the way to go. Is that mean you can't make money? No, you can make money on other type of real estate, but not to the level that you want to have your lifestyle.
Someone wrote, I want to be next level.
You want to be next level? You will be next level with me. Have a little patience. All right. Anybody else coming in?
Someone said, I love you, EM.
Guys, don't laugh me. I want you guys to execute. I want you guys to listen and learn and do the right thing. Do not, I know you want to buy property and you want to execute. Don't be a fool. A broker come to you, I have backup offer. Don't believe that, okay? Do your numbers. Do your due diligence before you execute. Don't overpay. Do not overpay for property. Message me privately. I'll let you know whether it didn't make sense or not. I don't have any dog in this fight. I want you guys to make money. I did not have a mentor when I grew up. When I started real estate, I had my wife, together, husband and wife team, but we both did not have any mentors. We had to learn from the bottom. We have to start small, and you go up, and you make a lot of mistakes too in a way. So I don't want you guys to make mistakes.
We'll kind of maybe just in the last maybe couple of minutes. And guys, if anybody wants to come in, Mike's here. If anybody wants to come in, please join with a live video. We have about 7-8 minutes left. If anybody wants to come in with a question, please come in with a live video. Eyal, maybe talk about maybe one of the first maybe big mistakes that you made in a deal. Maybe something you didn't anticipate because you didn't have that mentor growing up.
Right. So one of the big mistakes I made, I bought a property, we're going back some 20 years ago. I bought a property, 112 units, in a place called Opelika in Miami. It's a poor area. By the way, people need to live, right? Even poor area, people need a place to live. The problem over there when we bought the property, the seller misrepresent because we had a lot of vacancy at the time where he gave a certified rent roll. He basically lied under oath, okay? Sometimes you just have to go with the flow. You can't win them all. But the good news, we weathered the storm. We sold it. We lost very little. The bottom line is you're not gonna win them all. Okay, try to make your mistake on small property, not on big one. Therefore, you keep your losses small. Right?
And that was one of your bigger deals. You said 112 units.
Yeah, that was one. Yeah, but one of the things people ask, how do you get a property? How can you win a property? And it doesn't matter, market deal, not market. We love market deal. Property has to make sense. Obviously, off market can be better, but sometimes off market is more expensive than a market deal. In order to win the deal and win your own offer, meaning your offer you're always gonna offer low. What asking? You're gonna have to be ready to put non-refundable deposit and pray till you can close it. No, you don't pray. Make sure you have the money to close it, to make sure you're ready to close the property. But what I mean non-refundable deposit is that you make the seller very enticing to take your offer because it's non-refundable. And seller, at the end of the day, they're looking for execution, they're looking for closing. They're not looking to play a game. That's one way to win a deal, by the way, right?
Someone wants to know, just a question since nobody's coming on live here. How do I know it's the right time to refi?
You don't. You basically have to look at your income, look at your expense. Did you raise the rent? Enough. Do your pro forma, do your numbers, give to a lender, see what does he have to offer you in terms of interest rate, and see if it makes sense. If you can't cash out and you just if you're just gonna refi to lower the interest rate by one basis point, may not be worth it because you got to pay closing costs. So you need to see how the property perform overall, okay, since you close it. Were you able to raise the rent? Were you able to add value to the property? Therefore, you can go ahead and refi.
And would you say that you refi most of your properties, or you sell most of them, or what's your strategy usually as an exit strategy?
So I'm a greedy son on the beach, okay? We like to refi, okay, but sometimes the market is so strong, not right now, but sometime in the market, during COVID time, even before, your offer to buy is based on a very low cap rate, you just sell. But most of the time, otherwise, we like to refi and keep the property. Again, depends on the market condition.
Yeah, I think your daughter joined. Maybe she wants to come in live.
My daughter.
I think Lexi joined. Yeah.
Anybody wants to come in live, yeah, welcome everybody. We love everybody. Anybody coming in now?
Yeah, actually, I have a question about the 750 unit. Oh, someone has a question here.
Okay.
What should I look into when buying my first property?
So, what do you mean?
What should I look for? I guess he means like what kind of property, which obviously your mantra is multifamily.
So we like multifamily. First of all, you have to farm a location. Meaning, if you're in New York and you want to buy in Florida, Central Florida, South Florida, you want to buy 20 unit, 10 unit, may not be worth it. It's too small and you're in New York. So you want to buy something close by to you, like an hour or so away.